All right. Hello, everybody, and welcome to this week's edition of Self-Wealth Live, the technical analysis edition here on the 19th of August. Geez, the year is going so fast. How are you? How are you, Jace?
Hey, Rog, I'm good. Looking forward to another show. Lots to talk about as always, I think.
Fantastic. There always is. Exactly. Obviously, if you didn't know, this is Jason McIntosh to my left. And he is part of the Motion Trader service, which is a great service, which you can read about all in the show note and the comment down below. But before we get to that, my name is Roger and I'm from Self Wealth. What we're going to do today, if you've never been on the show, obviously, is we're going to go through the major markets, the Australian market, the US market, and the Hong Kong market. When I say major markets, the markets that we offer here at Self Wealth on our trading platform. And then we're going to go through any general questions the viewers may have. And then obviously the best part of the show is us having a look at all your tickers that you can push through onto the comments. Now we try and get through as many as you can, but we'll start with 2 from each. And then I'll draw a line in the sand there somewhere. All right. Once again, big week ahead. Let's get chatting about it. But before we do that, can you please show us the disclaimer, please, Jess?
Yes, of course. Everything we do today is general commentary only, doesn't take anyone's personal situation into account. And I'll quickly put on that disclaimer that Rod's just noted. And there it is there. I'm not part of Self Wealth either. I'm part of Motion Trader. That's my business. My details are at the top. Licensing, general commentary, all of that. And beneath there, you'll see the Self Wealth disclaimer. Same stuff, licensing, general commentary, all in that.
Exactly. All right. So welcome to everyone on the other side of the line. Thank you so much for bringing in some comments as well, or bringing some tickers for us to look at already. Hey, Bob. Hey, Jen. Hey, all to our regulars. Okay, let's get going then. Jace, what's happening in the Aussie market?
So let's go over to our charts and start here with the ASX 200. And, the index has extended its gains from last week, a new all-time high yesterday on Monday. And it's really been textbook price action for the ASX 200 over the last few weeks, really. We had this sideways consolidation that went on for about 3 weeks, where prices hit an all-time high. Then we just had that consolidation sideways, and that was towards the moving average. See the 50-day moving average, got the 100-day moving average below that. And we often get that. We get those sideways consolidations as the moving averages catch up. And then that was followed by a breakout. You can see here where pricing broke higher around the 5th of August. 5th of August prices broke higher, and then we've got a rally from there. So I think whether you're looking at a stock or an index or even as a commodity, I think this is just one of those classic setups to look for and be aware of. And it's something we regularly discuss here on the on our sessions, Rog, and also that I go through in my Friday strategy sessions as well. The compression above the moving averages and the breakout. It's one of those classic setups. When we see price compression within a range, and when those moving averages get within close proximity, or in this case, the 50-day gets in close proximity, it often leads to bullish breakouts and then renewed momentum. And once again, we're seeing that pattern play out now. It doesn't always work out, of course. Nothing always works out. But for me, it's all about odds. And I think the odds favour that sort of price action. And I think just having a general understanding of this type of process, I think it can help our trading and investing, the way we approach the market and buy and sell stocks, rather than worrying that prices are topping every time they hit one of these interim highs. I think a lot of people do that. They worry when prices hit a new high that prices are then going to stall and head lower. Rather than that, I think consider the possibility that it's simply a consolidation prior to new highs, and I think that's what the odds tend to favour. Just looking at this latest price action, the ASX 200 I think it's behaving like a market that investors are still trying to get into, and you can see that in the price action. All these dips along the way they've all been shallow, they've all been short-lived. So from that perspective, I think the sensitivity remains to the upside. People who have been sitting back waiting for a bigger dip to get back in, they simply haven't had a chance. And I think it's people like that, people who maybe they sold out during the panic in April, and they've been looking for an entry point to get back in. It's people like that who've got the bids below the market, and that's why we're getting these shallow dips. And of course, that's then fueling this rally on the way up. Prices are pulled away a bit from the 50-day moving average with this latest rally, but they aren't at an extreme. I think there's certainly scope for some consolidation, maybe another pause while the moving averages catch up. But overall, this is a trend that I want to be on. I don't want to be on the sidelines hoping for that 10% correction or something like that, or even a 5% correction, because if you've been doing that, anyone who's been doing that, so far they've been disappointed. Quickly looking at the equal weight, ASX 200 equal weight, it's also been an extension of last week's rally. And I think this supports the ASX 200's overall bullish structure. The equal weight is up something like, so from this low back here on the 4th of August, it's up something like 5.5%. So that's a big rally in a short space of time. But then compare that to the ASX 200, it's up about 4% over the same period. So I think the message here is that the rally is broad-based. It's there's broad participation. It's not a narrow rally in a few big caps. It's a rally in which a broad cross-section of ASX 200 stocks are participating and are trending higher. I think the relative strength of the equal weight has made it more stretched above this 50-day moving average. So don't be surprised if we do see some consolidation develop over the next week or two, next few weeks. But as I said with the ASX 200, I want to be on this trend. I don't want to be betting against it. Just quickly back to the ASX 200. So I'm long the index, I'm long the ASX 200 index, and I'm long the individual stocks, largely through the motion trader signals that I follow. And I'm happy to stay that way. With prices above these rising moving averages, I think pullbacks should be viewed as potential buying opportunities. And of course, I'm always using those wide trailing stops to help me see off pullbacks when they occur. And then when things do change at some point, then I've got my exit strategy to get me out. But at this point, we're still dealing with an upward trend.
Yeah, I mean, obviously it's great for us to hear, now. I think a couple of weeks ago, I posted something on my LinkedIn around, I think that since the start of 2024, there would have been about 8 or so, all-time highs. So, and it was around about how all-time highs can generally lead to all-time highs, not all the time, obviously, but where everyone else is fearful, this is also a good time just to go with the flow once again. And I think thanks to your, I use your service as well for one of my portfolios, Jace, as everyone on this show has been a regular knows, and I've talked about the performance and whatnot. And I think I must have about 20 stocks, maybe even more, on the watch list at the moment, and they're all just, I don't have, it's funny because I just don't have the capital to invest in them all, right? So I've got to be a bit more selective here in how I do things. But it's good for everyone at the moment, right? Not to say things can't turn around, right? But it's having that system once again, and keeping it simple, and knowing that all-time highs can lead to all-time highs and not being fearful is a key as well, right? So
yeah, and look, not being able to buy everything is that applies to everyone. No one buys everything, and even if you buy an ASX 200 ETF, you're still not buying everything, because there are 2,000 stocks on the ASX, so you might be getting 10% of them. Of course, you're getting the big 10%, but nonetheless, you're not buying everything. And for me, it's about having look, I'll have some larger positions in ETFs, but with my individual stock portfolio, it's a case of many relatively small trades. And the idea with that is it's casting that wider net. I don't need to own everything. There are going to be great stocks that I don't buy, and there are going to be some great stocks that I do buy. And but it's not about backing everything. It's just that large sample size of selections in a portfolio, and that should over time provide that broad result where you get a section of really strong performers, you get your medium to moderate performers, and you get some losses. And with the losses, the key is to minimise those losses. Leave your upside uncapped and cap your downside. So then you get that asymmetric skew towards profitability within a portfolio.
Yeah. All right. Let's have a look at the US side then.
So over to the S&P 500, and we're talking about all-time highs. The S&P 500 and Nasdaq both hit all-time highs on Wednesday, and the S&P 500 then made a new all-time high just marginally, fractionally last night. So that makes last night's, or what would that be? That would be Monday's all-time high in the S&P 500. That would be the 20th all-time high for the year, and that adds to this streak of all-time highs since what about late June? There've been a number of all-time highs during that period, and as we've spoken about previously, all-time highs tend to cluster. One follows another. See how many more we can get within this sequence. But at this point, that's the trend. Looking at the structure that we have in the price action, everything appears to be in good order. There's a clear sequence of rising lows as the prices head up, and also, of course, rising highs to go along with that. The moving averages are trending higher. So I've got the 50-day and the 100-day moving average. They're both trending higher, and price is above those moving averages. So that's all textbook bullishness. Last week, I was thinking maybe we're going to get some more consolidation. I thought prices could have come back towards a 50-day moving average, just got a longer bit of a broader consolidation through there, and then maybe establishing the platform for higher levels. But it hasn't played out like that, and often it won't. Often we can have ideas about how things could go, but the market will go as it will. But it's more about that underlying trend, which is key. And what we've found is that on this occasion, like the previous pullbacks, and like we're talking about with the ASX 200, the pullbacks ever since price crossed above the 100-day moving average back in May, the consolidations have all been short and shallow, and that continues with this latest one. And this is why I believe we shouldn't mess around with a bullish trend. When prices are rising, I want to be long. I want to own stocks. Waiting for the perfect entry point, I've seen all too often, it can just leave you on the sidelines. And I think that's why the consolidations are so short. Like we're talking about with the ASX 200, I think people are still trying to reposition after the panic sell-off in April. So every time we see prices edge back, there's someone waiting to try and get back in. Quickly coming over to the equal weight. And so this is the S&P 500 on an equal weighted basis. And this has been a good week for the equal weight as well. Strong rally off the 50-day moving average. So this did get back to its 50-day moving average and do some more consolidation. It's actually like a 4-week period of consolidation in the equal weight. And so we had a nice rally off that. The equal weight equal weight's lagged the index recently, but this week's rally starts to bring the equal weight back into sync with the S&P 500. It's still below its November 2024 high, or that's the all-time high, although it's certainly getting within striking distance. I think we may see the equal weight at a new all-time high in the near term, and by that I mean maybe the next few weeks. From a structural perspective, the underlying conditions remain bullish. Key factors I'm focusing on are the rising moving averages and price being above the averages. There's also that clear sequence of rising lows and rising highs, which we've spoken about with other indices. As I discussed with the ASX 200, I believe that it's that broad participation that we're seeing, which is demonstrated by the equal weight pushing higher over the last week. I think that's a positive sign and suggests that there's higher levels ahead. Just coming back to the S&P 500, I continue to believe it's a case of staying long stocks while the overall structure is positive. And I think the path of least resistance remains to the upside. And until I've got good reason to do otherwise, I want to stay invested. I want to try and see off these pullbacks when they occur. In situations like we have at the moment, the dips and the consolidations, they're often buying opportunities.
Yeah, exactly. All right. So, and what about the Asian side? Let's look at China. And is it starting to do what you want it to do, Jace?
Yeah, well, just start with the Hang Seng. It made a new recovery high on Thursday. Pull back over the last few days, but we've got that continued sequence of rising lows, rising highs, and trending moving averages. So this remains a market which is continuing to favour the upside. The market I'm most interested in is that Chinese market, because we're starting to now see this rally off the 50-day moving average develop, and prices are moving to a new recovery high just in the last week, breaking above the high from late July. So it's an interesting setup that we have in China. We've been talking about this for the last 3 or 4 weeks, probably since it really started to get my attention around mid-July, late July, as prices started to get above this blue horizontal resistance area, and yeah, well, now we've got that new high above the previous peak. So the moving averages continue to move higher. We've got the rising lows, rising highs. Could this develop into something? I certainly think it's got that potential. Of this being a significant turnaround in the Chinese market. So I've got a position in this through an ASX listed ETF. We've spoken about that in previous weeks. Yeah, I'm happy to stay long this and see whether this can develop. Like, not all trends develop into super trends, but you just don't know which one. So we've got the makings of a trend here. So for me, it's a case of jump on board and see where it goes. I think there's certainly upside potential with it.
Yeah, for sure. All right, so that's been a pretty quick wrap with the with the markets at the moment, because in general, because obviously things are going up, so it's always good to hear. Let's jump on to some tickers straight away. It doesn't seem to be many general questions, so it's good to see we can get going with the tickers. Thanks, Bob. Let's have a look at Reg, please. REG.
Okay, so nice uptrend here, making a new high just in the last few weeks. Let's just get a little bit more data on it, and it looks like it's at all-time highs, and it's been a great trend. Like, just look at the trend of that. It's consistently stayed above the 100-day moving average, notwithstanding a few little dips, which you almost always get within strong trends. But wide trailing stop could have kept someone in this from back in May 23, which is probably when it was first a motion trader signal. So I think it's been in the motion trader portfolio for a couple of coming up to 3 years now. If I had this one, I'd be staying with it. It's doing all the right things. Rallies, gets above the moving averages, then you have the consolidation back, and you can see that classic zigzag shape in that consolidation, rally off the moving averages. And now we're in another consolidation phase. So I'd be happy just to hold at this point. And it looks like maybe there could be a bit more consolidation coming, but trend remains nicely intact.
Beautiful. All right. Thanks for the lovely comment there once again, Jen. Much appreciated. Let's go into D. Smith's. Can we have a look at 2 US stocks? One's LMT to start off with.
Yeah, it's similar price, not dissimilar price action what we just saw in Reg, in that we've got an uptrend. Yeah, there's been some more price action below the moving averages, but the moving averages have generally stayed in an upward trajectory. Price is currently above the averages and consolidating, so I've had a bit of a run. Consolidating now while the moving averages catch up. I'd be happy staying long this stock. Yeah, this consolidation, if prices can stabilise around current levels, maybe some more sideways, maybe that could be a buying opportunity as well. It could be like buy the pullback, like let the moving averages catch up a little bit more. And if we get that stability, sign of buying of the dip and a shallow pullback, maybe that could be a point to buy. Alternatively, like buying the breakout to new highs. But certainly a stock I'd be happy to hang on to.
All right, fantastic. The next one's MRVL.
Don't have a trend in this one yet. Maybe one's starting to develop. So the moving averages has been having some time and some downside below the averages since around February thereabouts. Starting to make a bit of a recovery now. It's back above the averages, and the averages are starting to cross. So it's maybe it's starting to set up a recovery phase. I'd probably like to see it just establish itself above these moving averages for a bit longer. Maybe some sideways consolidation and then a breakout, or if prices were to break higher in the next couple of weeks, maybe buying a break above the July high. But it certainly looks like there could be a turnaround developing in this stock. From a motion trader signal perspective, we've got the moving averages crossing, so the next step would be a break to a 70-day high. That would occur on a break above the that July high. So I'd be inclined to wait a little bit if I wasn't in. But if I was in, I got in a bit earlier. I'd be holding at this point to see whether this can develop into something more. Certainly some potential with it.
All right, fantastic, thank you. Let's have a look at JHX, please.
Similar price action what we just saw in Marvel, in that it's had this down phase. Now we've got a series of rising lows, and prices are back above the moving averages. Moving averages are close to crossing. Just like I said previously, if we can get some consolidation, just become established above those moving averages, it could be by a consolidation as the moving averages turn and start to move higher, or by a breakout to a new high. I think this is getting close to a point where I'd consider getting in. I'd probably like to just watch it for another week or two. But I'd have this on a watch list, and I'd be ready to take action if this was a stock I wanted to get on board.
All right, fantastic.
And say if somebody wanted to be a bit preemptive, I guess like it could be bought at current levels. And if someone were to do that, you go, well, where's my exit point going to be? I'd be watching these lows from August, July. So for current levels, it'd be like, I think it would need like maybe a 15% stop. So if someone says, look, there's enough here for me, I like these rising lows, rising highs, it's above the moving averages, I'm happy to get in now. Well, that would be a reasonable play. And that's how I'd exit, a 15% stop. Alternatively, it's like, do we get that sideways consolidation we spoke about earlier? That could be an entry point, or a break higher could be an entry point. Different ways to play it, but there's certainly a structure there that could lead to higher levels.
Yeah, it's certainly one of the things that I've noted once again over my years of doing this with you, Jace, almost 2 now, is having a look at the structure and being able to see if there's a reasonable distance between where I'm going to enter and if I have to get out. I don't even look at the upside anymore. If my percentage is basically above 25%, obviously that's my rule. If it's more than that, underneath those last few lows, I don't even look at it and I move on, right? So I'm pretty quick at that. But it's good to see that we're not just with this example here, we're not just reliant on those moving averages crossing over. You've given someone an option just in case they have the fear of missing out on this stock, right? So and it runs away from them. So it's a good thing to have, right?
Yeah, always different ways to play it, but it always comes back to risk and reward. And also, I don't like buying stocks when they're sitting below their moving averages. So had we been looking at it back in March, it's like, well, I would have hesitated because we had this consolidation below the moving averages. Could have also made the case that there is support around these lows. So if someone were to want to have it be preemptive and and buy it, there could have been a stop below these recent lows, so a relatively close stop. But you always got to remember that when you're buying below the moving averages, it's a point of greater vulnerability. But like as was the case in June last year, vulnerability doesn't always lead to downside. That turned out to be a base, and we had more consolidation. But on this occasion, it quickly fell away. So I just prefer to avoid buying below the averages. I think the odds are more in our favour when we consider times when prices are above moving averages. So we're going with that broad momentum. Doesn't always work out, but it's about probability. Whereas something which is above moving average is more likely to go higher than something which is below. So that's how I'd look at these situations.
Yep, fantastic. All right, one of my favourites, CXO, please. I only say that because I got out of myself of an oversized position in breaking my rule. And now it's going in favour. You kind of think to myself, why didn't I stay in that oversized position? But that's okay.
Yeah, it's hard. Look, I had some of this myself. I bought some just as prices looked like they were breaking higher in July. And I had a stop. I was using these lows from June. It was a case of like, if it was going to get momentum, I wanted to get momentum early. I didn't want to sit through a larger consolidation. So I bought a stake and I sold it near the lows. And but it was right near the 100-day moving average. But it's the thing with these stocks, the percentages, these low price stocks, the percentages add up quickly. So that was 20% back to the moving averages. In hindsight, I probably should have given it 25%. I would have stayed in. I'd be in there now. But don't get every corner right. I was trying to make it more of a 15% sort of like a short runway takeoff, but didn't play out. So what with it now? Well, it's still got those building characteristics to it. It's got the rising lows. It's the moving averages are trending up. It's recently made a new high. So if I was still in this, I'd certainly be staying in it, and my stop would be back down below the recent lows. I haven't gotten back into this one. I've got some exposure to LTR and PLS and CHN, and they're all related. So related in terms of like the type of industry they're in, and the volatility characteristics of them. So I've probably got enough there for the moment to just let this one go. But yeah, it was a shame. But yeah, if I was in there, I'd stay in there. If I liked it, I guess it even could be considered as a buy at current levels. But then you're looking at what's the stop. The stop, I think, is like looking at like 27%, just below these recent lows. So the stop's getting a little bit larger. The alternative would be to see whether it just consolidates sideways and then buy a break higher from there. So again, different ways to play it, but I think there's certainly still upside potential with this, and the other three as well. But it could all just as easily turn around and fail. It is early stages.
Yeah. All right. Did we do RHC before?
No, we haven't done that.
Go back to RHC.
Not a dissimilar structure to what we just saw, in that the moving averages have just crossed and prices are rising. What I like with this is prices moving sideways along the rising moving averages. That's a nice setup. So we're getting this compression in the price action as it goes sideways. It's a turnaround story because it's come from great heights and it's been down and out for a long time. We've got some rising lows, some rising highs. I think this stock, there's a couple of ways to play it. I think it could be bought at current levels. You say, look, I'm going to buy the sideways consolidation and I'll put my stop. Like it's fairly close. This could be done on like a 6% stop below the 100-day moving average, below those recent lows from July and August. Alternatively, it could be like having maybe it's a buy stop, and you could just use those recent highs and say, okay, they're 39.79. Maybe I'll put a buy stop at $40.10 or something like that. Just above it and giving a little bit of room, and then having the buy point. So if it breaks out, getting in. And so then it's going with a bit of momentum rather than preempting a break higher. But I do like these sideways compressions into the moving averages. Often I find they do break to the upside. So if I was in it, I'd be staying in it. I'd consider buying it at current levels. I'd consider buying it at a breakout. And I think we've got a nice, relatively close stop to use.
Fantastic. Good one. All right. Hi, Yuki. Let's have a look at A2M milk, please. A2 milk. Is that the one? Good milk.
And some good price action. So yeah, like it's this was a high flying stock that came crashing down in the early 2020s. But like, is this like a large basing period, which is now starting to get that? Like, it looks like it's like starting to step higher. Will that continue? It's I think there's certainly potential with it. I think this is one that could be considered at current levels because we've just had that strong rally off the moving averages. So say it was bought at current levels, maybe it's a stop of about 14%. It's maybe back below the that recent low in August, which is back below the moving averages. So if it got back there, it may not all be over. It could still be a case of there's just ongoing chop and consolidation. So then it could be a larger stop to potentially see off that. But that's where you've got to work out, like, what do I want to do? Do I want to have a more aggressive stop, or do I want to get more room in case my initial timing's out? So there's I don't think either right or wrong, whichever works for the individual. But I think there's a potential buying point at present time, and see whether this is this consolidation since the March high is it's consolidated. Let's see, maybe it's starting to break higher now. So I'd be inclined to consider going with that. If I was already in it from lower levels, great. I'm staying with it. And see whether we can get another leg higher. Nice leg higher earlier in the year, a consolidation. Maybe there's another one coming. One to consider, I think.
Fantastic. We're having some great stocks we're looking at the moment. Let's have a look at SHL.
Look, more good price action. Rising lows is back above the moving averages. Averages have crossed and just made a new high. I think this one could be considered as a buy at current levels, and then having a stop. Like, again, it doesn't need a huge stop. 8%, I think, would be fine for this. Back below the moving averages, back below this low from August, and then upside potential is open. So another one which has been down and out for a while and out of favour. Like, there's nothing to say. Like, we've had, you can see it's been like moving along the bottom for a while. Nothing to say that it can't continue to come back and move along the bottom, but there is momentum with this latest price action. So it's like, well, do we give this momentum the benefit of the doubt and see whether it can extend? I think given that it can be done with a fairly close percentage stop, I think that's worth considering for anyone who likes this stock.
Fantastic. Rob, hey, how are we going? Gold.
Gold, okay.
Is that a ticker, or is that we're just looking at gold? Let's have a look.
Probably just looking at gold. So I talk about this each week in my weekly strategy session, and it's an ongoing trading range in gold. It's just been since the high in April. It's just been moving sideways into the moving averages, and the range is compressing. So you can see the trading ranges generally are getting tighter as we move through the range. And the highs are getting lower, and the lows are pretty much getting lower. So it's coming into the apex of this pattern. I'm watching the high, July's high and July's low. I think whichever breaks first gives the next round of momentum. If it is to the downside, I think it's more part of an ongoing correction rather than a change in trend. Break to the upside could see the trend extend for some time longer. So I'm long gold. I think the overall trend in gold is up. It's just the current pause we're going through. Looking at the gold stocks, like the movement of the gold stocks tends to be in some of those big North American stocks, like Newmont, Barrick, Antico. They're the ones which are hitting highs at the moment. So when you look at something like the gold miners ETF, which is GDX. GDX is up near a 13.5-year high. It's not far from its all-time high, and the all-time high was back in 2011. I can't compress this enough. I had to go to a weekly chart. We won't do that just now. But yeah, so there's a nice upward trend in the big gold stocks, but then the likes of Northern Star, the big local stocks, have been through like a 30% correction, and there's Evolution. But looks like maybe Evolution's gone from below back above the averages and maybe gearing up for another push higher. I actually bought some of these a couple of days ago just on this because the pullback looked to be shallow and attracting buying interest compared to the previous rally, which was strong. So I think there's upside in gold stocks, but it's really a waiting game. It's being patient and wait for the market to show its hand by breaking one way or the other. I favour the upside break, but if we get a longer consolidation, well, that could be the case too. So I'm long gold and gold stocks and happy to stay that way. But of course, always managing risk. I did sell a couple of gold stocks a few weeks ago when they were breaking down, had some weaker price action. So it's not like long at all costs. I do have some longer term positions which I've held through big downward phases, like the gold ETF itself. But individual stocks, I'll have risk parameters around them.
Okay, fantastic. Next one along is MAF, please.
Making a new high above rising moving averages. So yeah, I'd if I was long, I'd be happy to stay long. See whether this trend continues to extend. It's rising lows, rising highs. That's the definition of an uptrend. So I'd be happy staying in this. I think it could also be considered as a buy, probably at current levels. Like it may well consolidate for a bit longer, let the moving averages catch up. We may get another one of these sideways consolidations. But at current levels, you go, okay, where could I manage risk? 13% stop loss, initial stop loss. And when I say these relatively close stop losses, like 5 or 13%, something like that, I mean that only as an initial stop loss. Once the stock starts to trend, I think there's no substitute for the wide trailing stop. Got to get lots of room to move around because you've got to see off larger pullbacks when they occur. It's all okay being a bit more aggressive at the entry, but I think if you want to stay on a multi-year trend, you can't do it with a 10% stop. You're going to get bucked off the trend probably fairly early in. So that's where you need that wide calculated stop loss, which I use and which I do with motion traders, a calculated stop based on each stock's volatility, a multiple of its recent volatility. That becomes, I think, critical if you're hoping to stay on for 1 to maybe 3 years. And that's where you can get those big 100, 200+% rallies.
Yes, certainly has been a great tool in my trading toolbox. The trailing stop. CYL, please. Thanks, Boris.
This has been let me just see how big that pullback was. 37%. So that's a bigger pullback. That I think that would have been enough to probably even take out my wide trailing stop. And it's like, nothing's perfect. Nothing's going to guarantee you stay on. Like a wide trailing stop can help you see off this sort of pullback we saw during late 24, but then you're going to get ones which are sometimes larger. They get below the moving averages, and they trigger stops. Like how wide can you set your stops? I do a whole lot of back testing to work out what works well over a long period of time. But there are going to be times where you just stay in or you just get clicked out. I actually don't know offhand whether Motion Trader saw off this pullback or not, but I suspect it was probably deep enough to have triggered it. But that said, if I was on this stock and I'd stayed in, I'd seen off that consolidation or seen off that pullback, well, it's heading back up to its highs. So there's upward momentum, so I'd be staying on it. I probably wouldn't be a buyer today just because it's had a big run from below the moving averages to above. Often when we see that, we then get some consolidation while the moving averages catch up. But if I was on, I'd be happy to stay there. And if I was looking to get on, I'd probably at this point be inclined to wait for the next consolidation, just see where those moving averages catch up a bit. But the overall underlying trend does it is still to the upside.
Okay, fantastic. Let's have a look at Betty's, please. That's MEK, please. MEK.
At the moment, we've just got a consolidation on the moving averages. So the trend here remains up. It's this is one of those low price stocks. So but this one formed up quite nicely. So it went from below the averages to above. It consolidated sideways. Moving averages crossed. Got a breakout higher. More consolidation. Another breakout higher. So sometimes these low price stocks, they do give really nice entry point potential without a whole lot of volatility. And then we've got this nicely formed trend that's followed, and now we've got consolidation along the moving averages. If I was in this from lower levels, I'd certainly be holding on. I'd have my wide stop in place. If I was thinking of buying it, I'd probably be inclined just to watch it here just now. Like, how long is this consolidation going to last? Like, nobody knows, and there's nothing to say that it can't start to come lower either. So I'd be inclined just to watch it here, see whether it continues to go sideways, and maybe buy a breakout, break above one of these recent highs, maybe either the August or July high. Just buy into a bit of momentum would probably be the way for getting into this stock now. But as I say, if I was in it, I'd be happy staying in.
Okay, fantastic. NVX, please.
Yeah, it's not quite there for me at the moment. It's it's had a huge fall, this stock over recent years. It's sort of like jumped back above the averages, but look, it's like had a sharp rally above, but then it's had almost as equally as sharp decline back below, and now it's just like oscillating either side. I'd be inclined. I'd leave this one alone for now. The moving averages aren't positive; they're still in the negative position with the 50-day below the 100-day. We want the 50-day, the red one, to flip above the 100-day moving average. Looking at the price action today, prices are on their lows, so we may well see this continue to come off a little bit further. So I wouldn't be preempting a low in this at the moment. By all means, we can come back and keep an eye on it and see whether it starts to firm something up. But I want to play when I feel the odds are in my favour. I don't feel I'm playing with an advantage in this stock at the moment because we do have that overall downward bias to the share price. It's not to say it can't be basing here and turn higher, but I think we're playing at a disadvantage at trying to get in at this point. One to watch.
Okay, Hassan wants us to look at EUR, please.
Yeah, this is getting some nice momentum to it. It's doing better. So it's a lithium play. It's doing better than the likes of Liontown and Core and Chalice at this point. It has developed a series of higher lows and higher highs, and moving average and moving up, and is hitting new highs. If I was in this one, I'd be happy to stay in it and see whether this develops into something. Like, we've seen this before where it looks like there's a big turnaround underway, and then it's come all the way back. So, as I've said earlier, like, you can have a good setup and you can have the building blocks of a trend, but doesn't mean one's going to develop. You can have these short rallies which look like they're going to possibly turn into something, but then fail. So let's see what happens with this. The potential for a larger rally is certainly there. I'd be happy to go with it if I was on board, but then I'd always have my exit point probably below the 100-day moving average, in case things do turn down again. Just get out rather than holding and hoping for the next rally. So at this point, it's up. I probably wouldn't buy it at this point because I'm not sure about. Like, managing risks is a little bit tricky once some of these lower price ones get going. It probably needs 35% stop loss. Probably just getting a little bit too large. So I'd be inclined to leave it if I wasn't in it, wait for the next consolidation, see what it looks like. But if I'm already on board, great. I'm happy to see it run.
Okay, fantastic. Next one's Life 360.
Yeah, hasn't this taken off? If I was on board, I'd be staying on board, hitting new highs, moving averages trending up. I find it hard to buy it at this point because it has rallied a lot in the. So it's up over 100% since April, and it is elevated above its moving average. So I don't think I could be a buyer here, but I'd certainly be happy holding it and seeing where this goes if I was on board.
Fantastic. All right. The next one is Neil's. Hello, Neil. KLS, please.
We've got this from below the averages to above the averages have crossed. Now we've got this sideways consolidation into the averages. So there's a potential turnaround at play here. We could say we've got the recent highs. No, it's not going to take much to say this is broken higher. So maybe this would be, like I was going to say, it could be a buy now, but probably, like, given it's so close to being able to say it's broken higher, maybe 398, set a buy stop maybe at 398 thereabouts. So you're just buying, breaking to new highs, buying it, breaking above this previous mark from the 29th of July. So then does that lead into a sequence of new highs and it starts to trend higher? It's also possible it does come back and retest the 50-day moving average and we get more sideways. So that's why I'd say maybe rather than preempting it's about to break higher, because it could, like we've seen before, from here come back towards the 50-day moving average. So for the sake of a few cents, maybe buy a breakout and stop loss back probably below, use that low from August, 100-day moving average thereabout. So it's probably a relatively close stop. But if I was in it, if I'd bought this initial break, I'd be happy staying in it. And if I was looking to get in, I'd be working around those strategies we just went through.
Fantastic. Rodney, let's look at PGF, please.
Was it PGF?
PGF, yep.
Trends up. It's been a theme today, lots of uptrends, and that's not surprising given what we're seeing in the ASX 200 and across the small ordinaries, the emerging companies we've got. At this point, we've got a trending market, so I'd be happy letting this run. And this is more of an ETF than an individual stock. So the strategies around this could be different. It could be more of a longer term position as well. If you like the fund manager, you like what they do, not everything has to have a trailing stop. I think that's important for individual stocks, particularly if you're an active investor and you're focused on like 1 to 3 years. But if you're holding an ETF, and maybe it's a longer term play. But this is I'd be happy holding on to this one. It's been doing well. Looks like the manager's been doing a good job at finding those global opportunities.
Fantastic. BIS.
Yeah, look, it's same as we've been saying. We've got rising lows, prices making new highs. Happy to be on this one. It's recently broken out of this sideways consolidation, so moving averages caught up. So maybe there's a little bit of a pullback in the near term, and that could be an entry point as well. So we've had this initial run. We've had this run over the last looks like 2 weeks, which has broken out of this looks like probably 3 or 4 weeks of sideways price action. It probably could be a buy around current levels, or maybe a little bit lower. There could be some time maybe while the moving averages just catch up a little bit. But it's also got this wider range thing prices have been in. Is it on the cusp of like breaking free of this wider range? I think it could be. So particularly if it can hold on to these recent gains, maybe just some sideways for a few weeks, a break to a new high then would be a clear sign that that ranging period is finishing, and maybe there's another strong upward trending phase like we saw during 2024. So certainly a stock I'd be happy to be holding and consider buying as well.
Fantastic. Shirley wants us to look at FMG.
Yeah, I think the big miners are looking interesting. So the averages have crossed. I've talked about this in my Friday strategy session a few times. Yeah, look, it's when I was looking at this early August, and I was wondering maybe we could get some sideways while the averages catch up, but we didn't. Prices just ran to a new high. I thought, had we got some sideways price action, it might have set up a nice buying opportunity. But yeah, maybe it's a buy at current levels. Like the problem is, we say, look, we're going to wait for a bigger pullback to the 50-day moving average. It's like, what if it doesn't happen? What if it looks like the ASX 200 and that you don't get that larger pullback to get in, and it continues to trade higher, and we don't get a larger consolidation until higher levels? And so looking at this, I think if we want to establish a position, I think current levels are probably worth considering, and it's still probably looking at like maybe a 15 to 17% initial stop. And if we can hold above there and then start to run, then we move to our wider trailing stop. It could be a case of buy half now, and then if we get a larger consolidation, buy another half. But and if I was in it already, I'd be happy staying in it. I think there's good upside potential. I've got these in from another time. I don't know whether that's really. I don't know. I don't know whether that there is a tendency for prices consolidate around this band, but it's starting to get above that band. So maybe that's a positive as well. Yeah, I think this is worth considering at current levels.
Okay. Next one's QBE, please.
So I've had this pullback, takes us below the moving averages. So I'm not a buyer at this point, but if I was in it and I'd been in, particularly if I'd been in for a while, I'd still be in it with the wide trailing stop. The overall trend of this remains up. Periodically, prices can dip below the 100-day moving average and stay within a larger uptrend, and a wide trailing stop can see it off. So it's measuring that pullback. So the motion trader stop would have seen off this pullback. So even though price was below the moving averages and the averages had crossed, I would have been saying at this point, look, there's vulnerability to it, but I wouldn't be buying it, but we're still above the trailing stop. So hang in there and see whether it stabilizes. Same could have been said back in December 23. So at this point, it's not an alarm bell time. It's a case of working out where your trailing stop is, giving it plenty of room. So if it is another episode like we've seen earlier, you can hopefully see it off. But then, I'm not looking to average down or anything like that when I get a move below the moving average. You've got to respect the price action below the moving average and understand that it is a more vulnerable period, and see where the prices can stabilize and then get back to the good side of the averages. But look, at this stage, I think that upward trend is intact.
Fantastic. All right, let's have a look at Fred's. Actually, is U, and I think it's on the New York Stock Exchange.
Trend is up. Said that a lot today, haven't I? Yeah, trend is trends up. I think this could this be related to uranium? Got a feeling it is. I'm not sure on that, but it looks like some of the North American uranium plays. So yeah, it's and we had there would have been a nice opportunity to get into this as well, like above the moving averages, got the consolidation, then started to get the breakout, and then you got the nice run. So understanding the price action, we're looking at here, like you can say, okay, yeah, it's like higher, rising lows, rising highs, prices breaking higher. Let's go with it. Trailing initial stop just back below the 100-day moving average. See what happens. And in this case, something good happened. So it's just playing those classic setups and seeing which ones run. They won't all run, but when they do, that's where we make the money. And when they don't, hopefully we don't lose much because we're managing risk well. If I was on this, I'd be staying on it. I'd probably hesitate to buy it now. I just wonder whether it needs some more consolidation while the moving averages catch up. It's a harder entry point, but it's certainly a great holding stock at this point.
Okay, fantastic. It is a uranium play, that one. Let's have a look at Irfan's WJL, please.
Yeah, well, there's the price action we often talk about. From below to above the averages, we've got the consolidation into the averages. Is this ready to break higher? So not dissimilar to the strategy I discussed with, it was just a few stocks ago, where we talked about, well, rather than buying at current levels, probably buying a break above, because nothing to say can't do some more sideways consolidation. But I like that the lows are getting higher and the highs are pretty much static. So that's like what they call, the technical term for that is an ascending triangle. And the theory with that is that the buyers are getting more aggressive and increasing their point where they're happy to buy, and the sellers capped around this around that top. And as the selling becomes exhausted, the buyers overrun the line and push prices higher. Doesn't always work, of course, but that's the theory behind that. I like the rising moving averages. I'd probably say, look, if it can clear say maybe 96 cents. Let's see where it goes. See if it can get a bit of a run up, and it's probably not going to be too much of a stop loss to have it back below the August low, probably around the 100-day moving average, because we're buying a breakout. You don't break out then turning and failing and coming deep within the old range and back to the 100-day moving average. So I'd be inclined to say, look, the reason for buying is now not there, so I'd probably might close it out. But yeah, I think there's a situation that we could watch and potentially play in Webjet.
Fantastic. CSL.
No, that's turned around quickly to the downside, and this was looking like it was setting up nicely. I've been talking about this recently, how it's gone from below to above the averages and was consolidating above the averages, and it looked like, I thought the odds were firming that we're going to get another one of these moves back up towards the top of the range. But this is a sharp move to the downside. So there's news out of the company. So I'd want to see what the news was, and just ruling out there's not a special dividend or something like that, which isn't a real fall. But it looks like it's probably more related to company performance. Although I don't know. It's a concern here because it's now approaching these previous lows. I imagine the volume's probably high on this as well. if it were to break below these previous lows, it does sort of then set up the scenario of is it breaking down from this large range? Could this develop into a larger downward phase? That would be my concern with this. I certainly wouldn't be a buyer at current levels, and I think if it were to break below maybe the May low, I'd be inclined to say, look, this isn't working. I'm going to get out. But if someone's in, and it also depends where someone's in from, what they're doing. Had someone just bought this recent push to new highs, I think it's an easier call to say, look, it's not working. I'm going to get out. I'd probably do that now, because there's a lot of technical damage done. That's probably going to take time to repair. So if I've got in a few days ago, or a couple of weeks ago, I'm probably closing out today. But if I've been holding from way back here in 2016 or something, and I've sat through this whole period, it's not as clear cut. And maybe I'm a longer term holder, and I'm holding it for different reasons. So yeah, the reasons for holding it, the entry point, are all key components to working out what to do. But there's certainly a vulnerability with it at the pressing the downside of this big range on such a sharp move lower. I think it's a big red flag that there could be trouble ahead, or tough times ahead for the share price.
The news is CSL plummets on job cuts and demerger plans. So there you go. All right. Your next one's Fred Doug, DUG.
It's not quite at a turnaround point for me yet, but it's got that potential developing. And we've looked at a couple today which have this same general price action to them. Moving averages have crossed. So to trigger a buy signal for me, and also for like a motion trader signal, a 70-day high would be required. So that'd probably be the July high at this point. I'd be inclined to watch this for now. We're just trading along the moving averages. I want to buy into some momentum to the upside. I think there's a good chance we see that. We've got the rising lows. A break below the August low could set some more downside into play. So yeah, if we got the break below the August low, certainly wouldn't be looking at buying then. It'd be looking at, okay, well, might be more downside coming. So yeah, it needs that upside break for me to trigger an entry. But yeah, keep an eye on this one. There could be a trade developing.
Okay, fantastic. Roberto wants us to look at MEI.
Yeah, it's slowly moving up the moving averages. So if I was in this, I'd be happy to stay on board. Yeah, it's a smaller stock. It's a volatile stock. If I really like the stock and I like what they're doing and I wanted to get on board, I guess it could be considered at current levels. Simply look, even still, that's a large stop, isn't it? It requires about nearly 30%. If I was on this one, I'd be happy to stay on it. But I'd hesitate to buy it because I just think it's harder to manage risk. I might be inclined just to watch it, see if we get more of a clear-cut range, then buy a breakout from a range. Might be the way I'd prefer to try and get on. But if on, rising lows, rising highs, rising moving averages, I'd be happy to stay on and see if it develops into something larger.
Okay, fantastic. ID8.
Yeah, no, nothing. I can't do much with this. It's a low volume stock. You can tell by the dots and the dashes in the price action, and the moving averages are down. It had a couple of up days. Like that's 100% move from its lows to its to where it currently is. It's up 100%. But like, that's you can't play those moves. They're too hard. So I'd have to leave this one alone.
Okay. Evangeline wants us to look at SS1, please.
I like, do we have a basing period and then we're back, rally above the moving averages, consolidate and then break out? That was all looking good, nice run. Then it's given it all back, come back to the moving averages. So that, I don't like that so much. It would have been better had it come back and started to hold on to its gains while the averages catch up. But still, if I'd bought that initial breakout, I'd still probably be holding on with my stop loss, give it plenty of room. So if I was in this one, I'd probably be still holding. If I'd bought it at the highs, well, that'd be another story. I would have had to have closed it out. But that's why we don't buy things which are super stretched above moving averages, because the averages, like gravity, often pull things back. I'd like to see this stabilize. If I wasn't in this, I'd like to see it stabilize around the moving averages and then maybe break to a new high, like breaking above the August high, for instance, just going with some more momentum coming into the stock. Certainly a stock with potential, but I don't think there's a hurry to do a lot at this very point in time.
Okay, fantastic. Let's have a look at, can you please give your take on SLNO? Had a good uptrend and I bought at 77, but due to an activist group short selling, the price is falling and I'm wondering if to sell even if it's at a loss.
Well, it's the uptrend. I'd say the uptrend still, that's a 30%. Yeah. Like there's not enough to say there's a downtrend in place. It's a sharp pullback, and it's a large pullback, and it might be enough to trigger a wide trailing stop. But we don't have a downtrend yet. So to get a downtrend, I'd be looking for prices to consolidate below the moving averages, and the moving averages to start to turn, and then from there you get a secondary break lower. And then we say, okay, look, this is now lower lows, lower highs. It's potentially entering a downtrend. We don't have that at the moment. We've got just a sharp move down. Could this be like? There's probably not another example on the chart I can just go to, but there's a sharp move down to the moving averages, then it rebounds. I'd depending on where I bought, if I'd bought up at higher levels, I'd be shutting it down because it's down around, like say I'd bought this, so we had a bit of consolidation, prices started to break higher. So say I'd bought in here at 83.45. I'm now looking at this, I've been down as much as 24%. I'd say, look, this is not working. I'm down 18%. Let's just close this out. We'll go do something else. If it stabilizes and goes back up, I can come back and look at it later. But if I bought it based on a breakout and the breakout has clearly failed, why am I holding it? I'd be holding it because I'm hoping that it goes back up and I can get out at evens, or maybe it starts to move higher. I don't think that's the play. I think I'd want to be managing risk. If I was in and I was down, the frustration is for people at times that they'll do that. They'll do the discipline thing and just contain the loss, and then the thing bounces back and they go, oh, I should have held. But then at other times it'll continue lower and they'll go, I'm glad I sold. So you balance the risk. You balance the regret. What are you going to find more annoying? If you hold and it rebounds, or you hold and it falls further. So for me, the worst case scenario would be holding and it falls further. So that's why I'd probably square it up and move on. But it's a decision for everyone to make. It's not in a great technical position. There has been damage done. At best, it probably takes time to repair. It's not a stock for me at the moment.
Okay, EML.
Yeah, the building blocks of a rising trend are there. It doesn't have a great deal of momentum to it at the moment, and we could still say it's just sort of like bouncing along the bottom. But something could be developing. I'd be inclined, if I was in and I got in at lower levels, sure, happy to hold it because we do have some rising lows in place. In terms of buying it, I probably wouldn't buy it here at the moment. I'd probably rather buy a breakout to see it clear these maybe see it clear the late June high and jump on board then. So you get a rally, get a consolidation, get another rally and a breakout. Then I might consider getting on board. Something could this could be like starting to step higher. And there's certainly the potential for a larger trend to develop, but it's not really trending at the moment. We've just got signs of maybe something developing, but there's not a lot of momentum to it. So I'd probably like to buy a breakout rather than just buy it at current levels. Although had I got in earlier, as I said, I'd be happy to give it the benefit of the doubt and then just put a sensible stop loss on it. Just back below the 100-day moving average, back below maybe the June low.
Okay, fantastic. Hubert, let's have a look at CRN, please.
Was it CRN or M?
Yep. N for Nelly.
Yes, it's making its way higher. It's had a long period of underperformance, so it's too early for me at this point. Because we have seen this before, where it starts to look interesting, but then it fails. Given where it is, it probably can't sustain a downtrend for too much longer because it'll be back at maybe at zero. I'd want to see. I want to see the next consolidation. I want to see it hold its recent gains. Let these moving averages start to turn. So if someone was on board, if I was on board, I'd be happy to stay on board. Assuming I got in at pick this turn early, which I wouldn't have done because it's not how I'm looking at it. But just for argument's sake, if I was in earlier, let's see where it goes. But if I'm not in, I just want to watch this for a bit longer and see whether it can hold onto those recent gains, and then there maybe buy a break higher. But at the moment, and you're just looking at like to buy at current levels and then put a stop below the recent low, you're looking at 50%. So it's too big. So I need the next consolidation to form up a base so I can have a support level, which I can have a stop below. Otherwise, it's just like buying and hoping for the best that it quickly shoots higher. But could just as easily come back down as down 30%, but not making a new low. So there's potential in this, but it's like, how do we play that potential and manage risk? For me, it's wait for the next consolidation. And if we don't get a consolidation that works out, well, maybe we don't get a setup that we can play. But I'd be careful with this just at the moment.
Okay, fantastic. Let's have a look at IEL now, please.
Same sort of thing. Like we're getting a bit of a rally off the low, but it's like we've seen rallies off the low before, which have come to nothing. So at the moment, this is still a downtrend. There's plenty of scope for it to fall further. This could just be a consolidation back to the moving averages within a downtrend before new lows. So I wouldn't be getting excited about this at the moment. It's not to say it can't base and bottom here and turn higher, but we don't have enough to go off to suggest that yet. As I say, we've seen this sort of thing before. So wants to say the current price action is going to be any different. I want to see it. I want to see some more upside, some consolidation, and get that series of rising lows, rising highs. Yes, it means you give away some upside potential, but I'm also, rather than just getting excited about upside potential, I'm focusing on downside risk with getting in. And I think this is against the odds play at the moment.
Okay. The next one's from Cody. EPM, please.
Yeah, not downtrend for a long time, and now it's just sort of like moving along the bottom. It's gone from below the average to above. It's kind of gone sideways, but it's yeah. There's not a lot of volume in it. Again, you can see lots of dots and dashes in the price action, and it's such a low price stock. Again, it's hard to sort of manage the risk around them, particularly when this one moves around on some of those, because it's low volume. It does have some larger days where it goes from 2.6 cents up to 3.3 cents, and what's this one here? 2 cents up to 2.8 cents. So they're big daily swings. I can't manage my risk around this one, so I'd be leaving it alone.
Okay, fantastic. Next one is from Sunhill, LYC.
Well, this one's up and away. New highs again today. It was a hard stock to get on. We talked about this a few times, and that would get these runs. Then it would come all the way back to the 100-day moving average. Another big run, then all the way back to the moving average. But now it's run. It's in the motion trader portfolio. We've got an entry signal for that. A while back, maybe it was around April, and the wide initial stop, wide trailing stop has helped stay in it. So that's been a nice trade. If I was in this one, I'd be holding it. The trend is in place. Although that said, it is stretched above its 50-day moving average, so I find it difficult to buy at current levels, because where do you put your stop? You need a big stop, and I don't think it's an asymmetric entry level, but it's certainly at a point where I'd want to hold and see where the trend goes and give it lots of room to move around. Because at some point, there probably will be another big pullback like we've seen before. So plenty of room to move, but trend is up.
Okay. DRO.
Look, same thing. I'd be happy holding this. We talked about entry points into this earlier in the year, back around April, May. There were rallies off the moving averages. These were the entry points. Now it's a case of holding, see where it goes. Again, this is why we use wide trailing stops. Like look at this pullback. That's a 31% pullback. But when you consider how far it had rallied from $1 up to $3. So it's rallied over 200%. So 30% pullback is completely reasonable in proportion to what had been going on. But if you're running, you've got you've set your 20% trailing stop or something like that, you get taken out by these pullbacks. So a wide calculated stop below the 100-day moving average, stay with it, see where it goes. It's at the point where maybe if I got in early, I could consider maybe taking a bit off the top. Once I'm up, probably for me, it's over 300%. I'll look at maybe taking, selling a third or a quarter or something. Nothing wrong with holding the whole position, but there's also nothing wrong with just rebalancing a touch. But I do want to. I make my money by maintaining the biggest position I can for as long as I can. So generally speaking, I want to be staying long a stock like this.
Fantastic. Let's have a look at a few more. BLG, please, and then we will wrap up for today.
Downtrend still. The moving average is still declining. It's just popped above it, but 1.3 cent stock. It's popped above the moving averages before and hasn't turned into anything. Doesn't have much more room to go down, but still, a 1.3 cent stock can still fall 100%. So remember, just because it seems like there's not much further downside in it before it hits zero, it's still from current price to nothing is still 100%. So be careful with risk. Nothing here suggests that this is turning around now. Yes, it's had a bounce off the bottom, but we've seen that before. It doesn't mean you got a new uptrend. So it's one I'd have to let go.
Yeah, fantastic. TWE. I think we'll finish off on this one today, Jace. We might actually finish up a little bit earlier.
Okay, and yeah, but downtrend. We had lots of uptrends earlier, and we've got a few downtrends to finish on. But yeah, this is still making. Look at this; it's still making lower lows. The moving average is still in the downward position. Nothing here is saying it's time to buy. Now, of course, this could always be the final low might be in place, but we could have said the same thing at all these previous points, and it wasn't. So I think the odds favour lower levels. I don't want to get involved with this stock at the moment. It wouldn't be in my portfolio. It's not in the motion trader portfolio. Had I bought in on some of these pushes higher, I would have had a stop loss that would have taken me out at some point before things got worse. So yeah, for now it remains off to the side, and lots of stocks can just sit off to the side. Don't worry about them whilst they're below their moving averages. Come back and play when they're on the good side of the moving averages. This is where the opportunities can develop. Like as I said earlier, not every sequence of rising lows turns into a big trend, but that's when the odds favour a trend developing. From a rising sequence, not from a falling sequence.
Yeah, and I think once again, I just want to reiterate: there's so many of these opportunities out there that if you've got no fundamental reason to be in these companies or sentimental reason to be in these companies, then on a technical level, at the moment in the markets, I'm not sure what will happen in the future, right? But at the moment, there's so many opportunities. You've really got to be a little bit more selective at the moment with all the signals that are coming out, right? So, but it's been a great show, Jace, and I think we're going to knock off 10 minutes earlier today, which is great.
Okay, well that all sounds good. Hey, thanks, Rog. That's all been good.
Fantastic. Thank you, everyone, for once again coming along. We really do appreciate all your tickers and comments. Please, as always, we also love seeing you. You being liking and subscribing if you haven't already done so. We do look forward to catching everyone again next week on another great show. Thanks, everyone, and have a great day. Bye bye.